Oh yeah, you mean yes, you mean for corporation, right?
Yeah. Does that apply? And you can contract, you would contract out employees to
Yes.
avoid that.
Yes.
Can you do the same under SEC?
I don't think so. You can do the research, but my understanding is you cannot. But I may be wrong, but I don't think so.
Because remember how in Apple, Steve Jobs,
yes.
the $1 a year salary.
Right.
Is that the way to get around that, or?
Yes.
Yeah.
Yes. Right. Yeah. To repeat his questions, the corporation also pay federal employment tax, and my understanding is any federal level tax is not deductible. It is not deductible, but I may be wrong. So you can do the research to see whether or not the federal employment tax is deductible here under the item 17. But I don't think so. I don't think so. But it's maybe the good topic for your final project, final study, final research project. But my understanding is it's not right. I don't know the reason why for Steve Jobs to take only $1. I don't believe he tried to avoid the tax. I think the money for Steve Jobs is almost mean nothing. If you read his book now, he's kind of crazy. The money for him is he got too much money already. He just want to work. He just want to do something. So I think when he went back to the Apple, I think the monetary compensation is not really the key thing for him. He earned too much money for any other resource. So you may be right for anybody else. If as a CEO, only like to take only $1 as compensation, maybe try to avoid the tax. But I don't know whether or not that's the case for Steve Jobs. But you got a very good point. Yes, go ahead.
For 13, salaries and the wages.
Yes, that's you and me. Right.
This means if somebody work for your company, right? You pay 50K, for example.
Yes.
Actually, you pay more than that, right?
Oh yeah, of course.
Social Security or
right.
something.
This same questions he posted.
Yeah.
You can only deduct the salary portion. You cannot deduct anything more than that. You pay to IRS as Medicare, as Social Security, as whatsoever. You cannot deduct that portion.
From here.
Right.
Okay,
So you are right. Because if one company pay one employee $50,000 as salary, eventually the total payment from the company to this person is much higher.
Yeah, much higher. Yeah.
Much higher than $50,000. But only the basic salary your company can deduct here under the 13. Another issue is as a contractor. In this area, right? We know you at least you heard about this. A lot of your friends say, I'm a contractor right now. I work for certain company, but I'm a contractor. But even you're under the name as contractor, that person still receives salary. Just the company deduct on the 13, and the person will receive W-2. That person will receive W-2 by the end of the year. All right.
So the company even pay more for the
sure.
Social Security, you cannot deduct from.
No, that is my understanding. I think I'm right. Okay, Social Security, Medicare can never be deducted. You just pay for it. You just pay for it. Okay, just like tax, you just pay for it. Yeah. For any state level tax, the company can deduct it, but for federal level, you cannot deduct again. Otherwise, it's kind of loophole. What else? Number 28, taxable income. See here, 28, that's called taxable income. So the 10% of the charitable deduction is from this number. Is from this number, the limitation. Of course, you need to take out from the 19 in order to calculate what is the 10%. Understand? Right? Remember I mentioned for any corporation, the charitable deduction is limited to 10% of the taxable income. Of course, not including the 19. Okay, you need to take out the 19, then you can determine whether or not that is within the 10%. 29, see here, NOL. This is the number the IRS really hate. If this company carry over any net loss from previous year, you put the number here. So you will drag down. Your drag down is tax liability. So 29 is the net operating loss, and you have A, B, and C. Okay, so from the line number 28, we already calculate the taxable income for the company of this year. But what happened? The line number 29, there's NOL, if any, from previous year. All right? And from the number 30th, there's taxable income. There's taxable income overall, all right, for this year. Then we have 31 total tax. I assuming for corporations 35%. Of course, it's not flat. Okay, it's also by schedule, but you can very easily to calculate. From number 30 to number 31 is almost like a 35%. And then 32, the payment and refundable credit. Oh, by the way, anybody ever work for the corporation? How does corporation pay tax? We see the 31, the total tax. But how does the corporation pay this amount? Anybody know? Any idea? Does it mean when your company prepare 1120 and see, oh, wow, I need to pay $50,000, then I write a check, and you paid $50,000 check along with this 1120? How does it work? Anybody got an idea?
You pay quarterly, right?
Yeah, you pay quarterly. You don't pay right now. Your company does not pay the tax at this moment. Your company paid the estimate tax last year already. You understand? It's kind of very funny, okay?